Right, guys. So welcome to the first day of this teaching. This is our 22 days YouTube mentorship. This is the first day of June. So happy new month. I'm very excited to be leading you guys on this 22 days training. All right. So this training is actually to mark our 3 years anniversary as an academy. So I think the academy started operation on the 22nd of June. That was in 2021, right? So this is our third year now, right? So 2022 to 2021, that was it has from 2022 to 2021, that is 1 year. Then 2024, 2021, that is 3 years, right? So with 3 years old as an academy on the 22nd of June, that's why we're having this training, just to celebrate our 3 years anniversary, right? And also to provide value for those that may not be able to afford mentorship, right? Because of this training, there have been no paid classes, right? My paid students will not be having any classes with them, so that everyone can be watching the videos here, right? So this 22 days is going to be an amazing journey. We're going to be posting videos on the live on YouTube the same time every day, and just to make it fair, to be by 7 p.m. every day, right? 7 p.m. every day, so that people can be able to watch it early, right? So to be by 7 p.m. every day, just sit back and relax, right, while you watch the videos, right? So now, what I want to be covered in this 22 days training, right? So basically, we're covering market structure. What are the things we're covering market structure, right? We're covering market structure. We're covering liquidity, right? We're covering risk management, right? We're covering this is full training course on its own, right? It's the full training course and it's for free. So YouTube here, right? Although I may not be really going too deep into too many things, right? But I'll really be doing a lot, right? Just follow me in these 2 days. We're talking about psychology. Maybe one of these days talk about trade psychology, right? And I'm talking about a lot of things I feel should be part of this, right? Trade psychology. I think this is psych, right? We're also talking about key levels and all of those stuff, right? Right, then time and price. No, that seems to be the last topic, and we'll just be going into just the surface level of this, right? So this is basically what we're covering in this whole training, right? So I urge you guys, whenever we go live, after watching the video, I urge you to do well to drop a comment, so that this mentorship will be based on what you guys are saying, right? When I see your questions, I see your comments, then I will know the direction to tilt towards, right? So do well to drop a video, drop comments, and all of this stuff, right? So finally, we'll also be giving giveaways, right, for the most active people on this video, right? So we're giving giveaways. So I will decide what it's going to be, right? I'm not going to mention what it's going to be now. After the 22 days, I'm going to decide who deserves it. So we're giving prop accounts, right? We're giving cash giveaways, right? There'll be cash giveaways, there'll be prop account giveaways, there'll be data giveaways. So let's be picking them based on activities, right? So data giveaways and all of any other stuff I have, right? So any other stuff and other. So any other thing that that comes up, I will be giving it to those that are active. So only for those that are active. Active, how do I know you're active? Right? There are 2 ways to know you're active. Number one, you will comment on the videos, you will share the videos, and then you will repost it on your social media accounts, right? So all your social media accounts, you have to repost the video links, then comment on the videos, and then share it with your friends. That is basically how I'll be picking the winners, right? So just be based on your repost. So number step that based on your repost, your shares, and comments. That's how I'll be able to know who that are active. So that is it. So you have to repost after watching the videos, you repost, you share, and then you comment, right? So you have to watch the videos because I'm asking questions on some things, right? So I know how to do it because some people will just be sharing videos, they won't even watch it. I know how to do that. Only those are very active, both the ones that are watching and all of those fun stuff, right? So that is just by the way. So let's go to the business of the day. So for the first day of this call, we're going to be talking about the subject of market structure, right? So we're focusing on we're talking about advanced market structure. What we're talking about today, the first day, right? So before we talk about the advanced market structure, we have to talk about the basic one, right? Because I know that this video might be coming to someone that is very new to my channel, right? If you're new to my channel, then you would know that you might not really understand advanced market structure before that's right. So let's start with the basic one. So the topic is actually advanced market structure, but we'll be starting with the basics, right? The basics. So what are the basics of market structure? What are the basics, right, of market structure? So now the basics of market structure is very simple and straightforward, right? Very simple and straightforward, right? The basics are when the market is bullish. This is a very simple analogy, right? When the market is bullish, right? In a bullish market, we see what higher highs and higher lows. That is just the basics, right? In a bearish market, we see what lower highs and what lower lows, right? Then in a range, right, we see what a sideway movement, right? So the market is neither up or down, right? These are the basics of market structure. So now let's start with a bullish example. Now for a bullish example, very easy. Not how do you know the market is bullish and you should be buying, right? The bullish example is very simple. When the market is making highs and lows, right? Highs and lows. So now this is what we call a bullish market. And of course, you already know the labeling to this, that this low is what we call what? The higher low, right? And this high is what we call what? The higher high, right? That is just the basic of market structure for a bullish market. Why is it a higher high? Because this high, sorry, let me just drag this, sorry. Right. So got the higher high because God is a higher high because this high is above the previous high. So this high now is higher than the previous high. So it's higher than the previous high. This low is higher than what the previous low. So we call it what a higher low and what a higher high. So a higher high and a higher low is identified by market making an upward movement. So relatively, a bullish market is what going what up. All right. A bullish market is relatively doing what going up. So in a bullish market, what is your goal? Your goal is what to buy at what at higher low, right? That is your goal. So the aim of trading a bullish market is what is to buy when the market does what makes a higher low, right? You're not trying to buy when the market has already made a higher high. You wait for the market to come down and give a higher low before they want taking the buy what up, right? So some people are breakout artists, right? So the market is trading upwards. Some people like to do this in what they call break and retest. So I don't know how to do that. We'll say okay, break and retest. We'll do something like this, right? They'll put a line there, and then they will say if the market breaks now, they'll be okay, it has broken, right? Retest, 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 and then it takes. They want to buy this at this level, thinking it will go up. But most times the market doesn't do that. Most times the market does what? It comes lower first, make it was higher low, a deep retracement, right? Before then what? Running in, making a new high, right? So typically, that's what we often see. We often see the market do what? Come lower before then what? Running higher, right? So that's what we usually see in the market, right? That's what we usually see, right? That is usually what we usually see. So that's why I'm actually against trading break and retest, right? The best way to trade is to see the market from what a higher high and a higher low standpoint when the market is what bullish. So now the easiest way to know the market is bullish by doing what? Zooming out your chart and seeing what direction the market has been going. Has it been relatively going up or down? Right now, one of the things that you must note in a bullish market is that a bullish market, right, always gives a retracement. Now, the problem with many people is that when they see a bullish market retracing, they begin to think it is now what bearish, right? Every bullish market retraces, every bullish market comes down, right? Every bullish market gives what a retracement. So this market is running down, is what we refer to as what? A retracement, right? So you're not trying to catch a sell in a retracement, right? It's more probable. This is your goal. This right here is your goal. You want to buy what? At the higher low. This is what your goal of what? A bullish market, right? You're not looking at taking this sell. You want to buy the market when it was makes a higher low, because if you're trying to sell, the market can reverse at any moment, right? Sometimes the market can do something like this, can is well, buy just a little retracement and it spikes up again. Little retracement and it spikes up again. So sometimes the market does not give what this deep retracement. So if you are trying to sell this, you see that you'll be taking a whole lot of losses, right? So it's best you avoid taking a sell in a bullish market. And this is one of the reasons why I don't trust pattern trading, because some people that are actually what we call support and what resistance. They just draw a line now, and they'll be like, okay, the market bounced off here the first time. They'll be like, okay, bounce off, and then they want to go and sell here, and then what happens? Market will takes them out. All right, so this is why you shouldn't trade support and resistance blindly. I'm not saying it's not a profitable strategy, right? It's actually profitable when you combine market structure, right? The purpose of this trading is not to force you to trade a particular strategy, right? It's just to give you an overall view to what the market actually does. All right, so this pullback is what you want to see, and then you buy. So now, if maybe you trade double top and double bottom, maybe if you're bullish, you can have a looking, maybe if you have maybe, although I don't do this and I don't encourage that. If you're bullish, you want to be maybe catching double bottoms, not catching double tops, right? If you're bullish, you want to be catching double bottoms, right? Certain things to be catching double bottoms, not double tops, right? Although I don't trade this way, right? But just in case this is how you trade, maybe trade key levels, maybe big higher time frame key levels, is better than when the market is bullish, look for a bounce and then you take what price was higher, because you're more likely to see that, right? Now, another basic of market structure is that when the market is bullish, the market makes new highs, right? It takes out the previous high to make a new high. It takes out the previous high to make a new high. This is another way you know. So whenever the market is bullish, it's always about making what new highs, right? That is the basics of a bullish market, right? Now, for a bearish example, very simple, the same thing, just the opposite. And for a bearish example, the market does what? It makes what? A series of what? Lower highs and lower lows, right? So we see the market do what? Lower high, and then a lower low, lower high, and then what? A lower low, right? So that is it. All right, so this is how we pick our lower highs and lower lows, just like this. Lower high, and then our lower low. Lower high, and then our lower low, right? Lower high, and then our lower low. So this was what we refer to as what? A bearish market. Now, it's just the opposite. Why is it a lower high? Because this high is lower than what? The previous high. And then why is it a lower low? Because this low is lower than the previous low. So it's a lower low because this low now is lower than what? The previous low. So each low is always below the previous low. That is how we identify a bearish market. And the goal of a bearish market was to sell at what? The lower high. That is our aim when we are bearish. We want to do what? We want to catch that what? That lower high. Right? We want to catch that lower high. Right? We want to catch that lower high. We want to catch the lower high. We want to catch the lower high. This is the goal of market structure. Right? That is the whole goal of market structure, right? So now, for the range movement, is simple. When the market is doing what? Is just going left and right. So I cannot say, okay, market is bullish or bearish. It's like this. Market is just in a range, right? So the market just in a range, not quite going anywhere, just like this, right? It's just very easy to spot it, right? It's very easy to spot this. All right, let me just do that. So it's very easy to spot it, right? Just in a sideway movement, right? So I want to quickly load up a chart so that you guys can see with examples. Let's use US 30 for the example. So just look at this. All right. So this is a 15 minutes. Is a 15-minute chart. So you can see a bullish market now. This is a bullish market. What do you notice in a bullish market? Can you see how The market has been doing what? It took out this high, made a new high, took out this high, and then what? It made a new high, right? So typically, what we call a bullish market. Now, for a sideways market, you can see how from here to this point, market was doing what? In what? In a sideways market, in a sideways range. As now, what do you do in a ranging market? You do what? You stay out. Right? That's what you basically do. This is what's the best thing to do in a sideways market, in a range. Right? You see, especially when it's ranging on the lower time frame. Right? But if it's maybe a daily range, you can take a buy or a sell inside the range, right? Inside the range. Right. So now this is how I'm going to know those that actually watch this video. So I'm giving out data to those people that actually. So this is the point. This is the point where I'm giving giveaways now, right? I want you guys to simply comment. What do we do in a range? We stay out, right? So just take a screenshot of this point, right? And then post it on your social media handle. In a range, we stay out. As I'm going to pick winners from this point, right? So this is where the first giveaway will begin. What do we do in a range? We stay out, right? I want to just say what we do in a range. You start and tag me on your social media accounts, right? That's how I'm going to know if you watch this video, because some people won't watch it. They'll just be, waiting to comment. I want to know how to follow by those that are watching these videos. So simply do this. In a range, stay out. So just type it and tag me on your social media accounts. Also drop your comments in the YouTube comment section so I can know that you're actually the one that watched the video. So I'll be picking winners for that. Now, for a bearish market, what do you see? Market takes a low, makes a lower high, takes a low, makes a newer high, and then all of that, right? So that is basically the basic of market structure. Now, does the market remain bullish or bearish forever? No. Right? How do we know now? Because now look at this very carefully. Market was bearish here. Then what happened? Sideways movement. And what happened next? Bullishness. So now how do we know that this market will stop being bearish and then it's not going to do what? To push toward the upside? How do we know that? Right? That was referred to as what? A break of structure. Can you imagine? I've not even started advanced market structure yet. I'm still in the basics. It's crazy. Shush. I've not even started the main topic of the day. So now, how do we know that the market is bearish, right? It's what we call a break of structure, right? I think we'll make these market structure videos too, so that it will not take too much time. But this is going to be part one, right? So just name this part one, right? Because I won't be able to go into more details, right? Maybe in the second video, when I talk about advanced market structure properly, right? I didn't know to take this much time. We're already 20 minutes in. I don't want any of these videos to exceed 30 minutes, so as people that have short attention span will not be disadvantaged, right? So I'll try to make this as short as possible, at 30 minutes maximum for most of the videos. Although some might pass that, but most of them will be 30 minutes maximum. Right? So for a break of structure, is simply what? A shift from bullish to bearish, right? So it's actually what? A shift, right? So it was a shift from bullish to bearish, or from bearish to bullish. So it's actually a shift, right, from market from being bullish right, or bearish towards bullish, right? So how do we know that? Remember that in a bearish market, the market is making what? Lower highs and lower lows, right? It's a bearish market now. So whenever the market goes above the last lower high, this becomes what we call a market structure break, right? This is what we call a break or structure. That means the market is no longer making a lower high. Remember that in a bearish market, the lower high is the high that is lower than the previous low, right? So remember that in a bearish market, the lower high is not supposed to go above the previous lower high. But now we can see that this high has now gone above it. That means that there is a break of structure, right? So what do you expect in a bullish in this? That means the market will really retrace and then begin to do what? Make highs, right? So we call what? A bullish break of structure, right? Now for a bearish one, market is typically doing what? Going upwards, right? Typically going upwards, and then what happens next? We see what the market was violates the low, right? And then remember, notice this: we know a break of structure by the close price, right? We identify a break of structure by the close price. Market has to close below the low, it has to close above the high, right? So use a close price or your line chart. If you're not sure of it, use a line chart to confirm your break of structure, right? Use a line chart. Right? One market to close below it. That's why a break, and then last the market doing what? Begin to do what? To go down, and then begin to go down, right? So that's it. Now, this is basically what we refer to as what? Market structure, right? I want you guys to understand this, right? So tomorrow we're talking about advanced market structure in more details, right? But for the sake of this video, we'll just start with the basics, so that we'll not make the video too long, too lengthy, or too boring. All right. Now, finally, let's talk about a trading range, right? Range. Let's talk about a trading range. So now a trading range, or let's talk about trading range, and then protected range. Let's talk about protected highs and lows, right? Now, all right. So let's talk about trading range and then a protected high and low. Now, note this: not every lower high is a protected high, right? You can put strong. So not every low or high is protected. I can put in bracket strong, right? So that's what they know is strong high and strong low, right? You can call it a protected low or a strong low. So now a strong low is a low, right? Let's take note of this. A strong low grabs liquidity, right? And makes a new high. That's for a strong low. Then for a strong high, same thing. It grabs liquidity and makes a new low. Right? What do I mean? Whenever I say strong, I mean protected. Now, this is what I mean. When you see the market bullish, right, a strong low takes out liquidity and then makes a new high. So this is what we call a protected low. It takes out liquidity, or it takes out the previous low. That previous, don't worry, when we talk about liquidity, you understand it properly. This previous low is what we refer to as liquidity, right? So a strong low takes liquidity, gives you that idea that it might be a break, and then it pushes above. So you should already know the market is not picture perfect, right? Market is never perfectly bullish, like perfect higher highs, higher lows. No, it never happens like that. The market creates protected highs and lows. So the market does not actually look like this. It's just for illustration purposes. In a real bullish market, the market actually looks like this. It takes liquidity, then makes a new high, does something like this, then takes liquidity again, and then makes a new high, something like that. So you can see how it took out this low, made a new high. So that's also the first as was a protected low. So a protected low does what? It takes liquidity, right? And then what makes a new high? It takes liquidity, and then what makes a new high. So this is a strong low. It can look like this or like this. So what it looks like. Takes liquidity and all that, makes a new high, right? Takes liquidity and makes a new high. So now you can see how these strong lows form, right? These are the real strong lows. These are the lows you want to take a trace off, right? So why a weak low just makes a new high? So this is what a weak low just makes a new high. Just makes a new high. Doesn't take a liquidity. Just this is what we call it a weak low, right? This is what we call a weak low. So a weak low doesn't take liquidity, just like that, just like that, just like that, right? This was a weak low. It looks like. So most times these lows are what always targets for price to take out. So always be mindful of this kind of lows. That is not that just like just very clean, just clean lows, right? Most times price always prepare to do what? To blast through, because people will want to buy this as what? A double bottom, right? So always trust lows that took a liquidity before making a new high, right? That's basically the lows you want to be using, right? You want to be using the lows that took a liquidity before making a new high. So those are the lows that you can actually trust, all right? So the reverse is a case for a bearish scenario, right? Just the reverse. So the market is a strong or high, if it's a strong low or strong high, so it takes liquidity and then what? Makes a new low, takes liquidity, makes a new low, takes liquidity, and then what? Makes a new low, right? This is what we call a strong high. All these highs that take liquidity and make a new low are what we call strong highs and strong lows. Meanwhile, the weak ones are the ones that don't, they're just like this, just very clean. So what we call weak highs, right? Although they are weak because in the future they are not going to hold. They're going to be getting, they're going to do what? Be taken out in the future, right? You can see them always very, very easy, just one-handed, just like that. So what we call weak lows and weak highs, right? So in the next video, we're talking about, that is tomorrow, talking about more details on these things, right? We'll talk about more details on these things, right? So I don't want to make this video very bulky. Let's just go to chat and let's look for maybe a few examples of this. And let's go to GPUSD charts. So that's something that, so you can see it now. You can see a strong high here. What do you see? You can see how this strong high took a liquidity and what? Made a new low. Meanwhile, see another strong high here, right? Took a liquidity and what? Made a new low, right? Meanwhile, you can see a weak high here. This didn't take a liquidity, just made a new low, right? You can see another weak high here. This did not really take a liquidity, just what? Made a new low. You can see a weak high here, just made a new low. You can see another weak high here. That's another weak high here. That's what? See another weak high here. So we want to see highs and lows that take a liquidity. Now look at a strong low now. Can see this low. What did he do? He took out liquidity, right? For the what? Making a new high, right? You can see this one as well. What happened? Took out liquidity and then what? Made a new high. So these are what we call strong and high lows, right? They're very, very easy to spot. Right. Let's go to 30-minute charts on NASDAQ. All right. So you can see for NASDAQ now, you can see how this is occur, right? You can see how this is occur, right? You can see a strong low here. You can see another strong low here. Made a new high. Took out liquidity, made a new high. Took out liquidity, took out this previous low, and what? Made a new high. Look at a weak low now. Can I see a weak low now? Can I see this weak low failed to make a new high? I also call it a weak low. Kasa failed to take a liquidity, just made a new high. So Kasa price cleared it very easily, right? So Kasa a strong low here, took out what this previous low, and then was pushed up to the upside, right? And then finally gave up the ghost. Right. I'll be giving you guys more details in tomorrow's teaching, right? I'll give you guys more details about strong and weak highs. All right. Don't worry about it. All right. So this is why this video is going to be ending for today. So if you learn anything, do want to drop a comment, and then if you want to get a FUNDEDNEXT account, right, use the link in the description. I'm giving what a $10 cashback, right? I'll give you $10 cashback if you get any Stellar account. So just if you're interested, just meet me before buying it. So I'll give you that $10 if you buy what any FUNDEDNEXT account, right? Any FUNDEDNEXT account. So you get $10 cashback from me, and also the offer is limited. It's not for, so you better act fast, right? And the 5K account is not included, right? So that 5K account is not included. Any account from 6K, all right, 10K, 20K above, right? So so I hope you learned something in this video. So I'd love to see you guys tomorrow when we continue this 2 days training, right? So have a wonderful day. See you guys tomorrow as we continue market structure. Cheers and God bless.